Hello, today we are solving May 2019. Okay, question number 1, part B. Prepare the statement of financial position at 30th April 2019. This is a departmental profit. Okay, they had two departments. This company had two departments. In the first, we had for the Bob's material. Okay, they have two departments, a shop and a timber yard. We had calculated in the earlier part A profit and loss and other comprehensive income. Now for this one we are supposed to part B, prepare the statement of financial position of 30th April 2019. So now how will you calculate the statement of financial position? Okay, the statement of it is your assets, your total assets and your total liabilities plus equity should balance. Okay, so total assets. Okay, there will be total assets section and then you will have the equity section. Okay, equity, and then you will have the liability section, total liability section. Now what are the two types of assets? You have the non-current assets okay, non-current assets and current assets. So you will calculate them. Okay, so one is the non-current assets and then you will have the non-current assets and current assets, and finally you will calculate the total assets. Okay, that is what you are going to do. So non-current assets plus current assets, you will get the total assets. Then you will have the equity section. Then the liabilities, in the liabilities you have non-current liabilities and then you will have the current liabilities. Okay, current liabilities, and then you will calculate the total liabilities at the end. Okay, total liabilities. So if you see the equity, okay, the equity plus the total liability should be equal to the total assets. Okay, this is what you will observe, this section. Okay, total assets section and equity, total equity section. Okay, total equity section and total liabilities section. So total assets is equal to equity plus total liabilities. Now let's see what are the non-current liabilities. Okay, non-current liabilities, we can see that they have three of them. One is the timber yard equipment, delivery vehicle, and the shop fixtures and fittings. So one is the fixtures and fittings, then next one is the timber yard, and the next one is the delivery lorry. Okay, these are the non-current assets. So here you will have to calculate, okay, what is their cost. Okay, what is their cost, and then you will have to calculate what is their accumulated depreciation, and then finally you will have to calculate what is the carrying value. Okay, this is the statement of financial position at 30th April for Bob's PLC, for Bob's material. Okay, you have to write the heading for the Bob's PLC. Now all this are in pounds, so I am going to just write at the pounds at the top. Okay, now let's calculate here. First one is the cost. Okay, what is the cost of the equipment, okay, as on 30th April? So for the fixtures and fittings, okay, and the shop, it is 17,000. 17,000. And for the equipment timber yard, we had calculated it was 40,000. And then for the delivery lorry, it was 24,000. Now we have to calculate the accumulated depreciations. Okay, accumulated depreciation here. Okay, accumulated depreciation. So here 8,500 plus this year's depreciation we have to find. Okay, we have to add, and that is going to give us the depreciation, total accumulated depreciation. Now the fixtures and fittings, okay, we had calculated the depreciation for this year, it was 1,700. So 1,700. So 8,500 plus, okay, 8,500 plus 1,700. So that is going to be equal to, so that is going to be equal to 10,200. So that is 10,200 pounds. So let's write it here. It is 10,200. Then we have equipment timber yard. Okay, so the equipment timber yard, it is 12,000. Now this year's depreciation, okay, you would have calculated, so you have to add here. So 12,000 plus, okay, equipment timber yard, it is 5,600. So that means that is equal to, for the equipment timber yard, it is 17,600. Okay, let's write it here. So the accumulated depreciation becomes 17,600. Next one is the delivery lorry, it was 14,000, and this year's depreciation, which I had already calculated from the previous question, it is around 6,000. So you just add 6,000 plus 6,000, that is going to be equal to 20,000. So that is going to be equal to 20,000. So accumulated depreciation for delivery lorry is this much. Now let's calculate the carrying value. So it is cost minus this accumulated depreciation you have calculated. So that's going to be equal to, so cost minus the accumulated depreciations you will do. So to get the carrying value, so 17,000 minus 10,200, that is 6,800. Okay, so the carrying value becomes 6,800. 40,000 minus 17,600, it is 22,400. So 22,400. And the third one is 24,000 minus 20,000, that is 4,000. Now let's add up the totals here. Okay, for all the things, for all the everything. Okay, first one is the cost. Let's add up the cost. Okay, so 17,000 plus 40,000 plus 24,000. So the cost is going to be equal to, the total cost is going to be equal to 81,000. Then accumulated depreciation total. So 10,200 plus 17,600 plus 20,000, it is 47,800. And so the carrying value will be 81,000 minus 47,800. So that is going to be equal to 33,200. Okay, this is the non-current assets. Now let's calculate the current assets. Okay, now what are the current assets? We have the closing inventory. Okay, closing inventory. So closing inventory for the shop and the timber yard. So closing inventory, okay, for the shop and the timber yard we have to include. So let's write it here. Its value is 14,600 and for the timber yard it is 25,200. Okay, this is the closing inventory. Then okay, that is one of the current assets. Then you have the trade receivables. Okay, trade receivables is a current asset. Trade receivables, it was around 27,500. Okay, trade receivables were around this much. Then you have trade receivables, then other receivables. Okay, what are the other receivables? Other receivables, here we become expense, rent prepaid. Okay, rent prepaid. So other receivables are okay, what are the other receivables? We have one is the rent prepaid. And okay, rent prepaid. So the rent prepaid was £1,000. It becomes like an income. Okay, so the rent prepaid becomes other receivables. Then you have commission receivable, £3,000 was outstanding. So this is also yet to come this year only. It is also becomes other receivables. Now let's add up the total non-current assets. So that value is going to be equal to 14,600 plus 25,200, okay, plus 27,500 plus 1,000 plus 3,000. So that is going to be equal to 71,300. Okay, now let's add up the total asset value. So which is going to be equal to 33,200 plus 71,300, that is 104,500. So it is 104,500. Okay. Now let's calculate the equity section. Okay, equity section. This is total assets section. Now the equity section, okay, we can see that first one is a capital. The capital value is around 20,000. So 20,000, okay, capital value. Then you have the net profit. So let's calculate the net profit. Okay, net profit, let's calculate. So here we had two of them. Okay, one was 41,800 and the other one is at a loss of 19,000. So the net profit we can find. So 41,800 minus 19,000. Okay, so that is going to be your net profit. Okay, for both the departments put together. So that is going to be equal to 22,800. So this is going to be equal to 22,800. Then you have less drawings. Okay, you have to do, so capital plus net profit, and then you will have to do less drawings. So the drawings is around 19,100. Okay, the drawings is around 19,100. Now let's calculate 20 plus 22,800. Okay, minus 19,100, that is 23,700. So that is equal to 23,700. Now let's calculate the non-current liabilities. Okay, these are the things. Then we can see that there are no non-current, okay, so liabilities. So there are no non-current liabilities. We have just the current liabilities. Okay, so non-current liabilities, there is no bank loan or anything here, so there is no non-current liability. Okay, now you have the current liabilities. Current liabilities are going to be equal to trade payables, trade payables, trade payables, and then you have the bank overdraft, and other payables. Okay, those are the current liabilities. So trade payables was around, okay, was around 41,000. So let's write it here. So 41,000. Then you have bank overdraft, which we had calculated after adjustments, it was 37,800. Okay, 37,800. And other payables, what are the other payables going to be equal to? Anything that was, okay, outstanding, like expense accrued. Okay, expense accrued is an other payable. Rent accrued, okay, it becomes other payable. So the value is around 2,000. The rent had got accrued, it's immediately you have to pay in this year, it is 2,000. So these are the things. Now let's calculate the value. So 41,000 plus 38,800 plus 2,000. So that is going to be equal to, the total is going to be equal to 8,800. 8,800. Now let's add up, okay, these two, equity plus the total liabilities. Okay, the total liabilities So that is going to be equal to equity plus the total liabilities. Okay, let's add up these two. Plus the total liabilities 23,700 plus 8,800. So that is going to be 104,500. 04500. So we can see that both have got balanced. The total assets must be equal to total equity plus liabilities.